We are looking at a market that's very much under pressure and continuing to be in the consumer discretionary space. Chain store sales numbers were released this morning, and to distill the figures, I'm joined by someone that Fortune magazine dubbed King of the Retail Jungle. He manages a hedge fund that specializes in the consumer and the retail sectors. He says retail sales are gaining momentum and creating a perfect storm. He's David Berman, founder of Durban Capital. Thanks so much, David, for coming in. You know, we could run through the numbers on the monthly basis for April, but really it's about looking at the 2 months of March and April combined to get a sense of the spring season. The initial headline seems to be disappointment. Yeah,
there was disappointment. I'd say most retailers, particularly those that specialize in apparel or have apparel in their mix, had weaker than expected same-store sales, and this is a big change from the trends of expectations from, the last numerous months. But when you look at March and April together,
Maple,
we call Maple. That's great. You actually see a different picture emerging because there are two factors that almost require you to look at them together. The one is the obvious, and that is that there's an Easter shift which benefited March, but it hurts April. But the other one, which is not sort of mentioned as much, is the weather factor. This time of year, the weather is absolutely critical. It's spring. The retailers want to sell their spring lines, and if the weather hasn't broken, if it's not warm, the sales won't be as strong. What happened this year is everyone on the East Coast here knows it was really warm earlier on in April and towards the end of March, and so everyone shopped, and those numbers helped March's numbers. And they hurt April's numbers.
So what happened? I mean, we're seeing such a strong reaction in the discretionary space today. You were on with us a few months ago talking about really finding opportunity in this sector. In fact, I believe we have the soundbite that we can run from you. You called it retail Nirvana.
Yeah. It's retail Nirvana. It doesn't necessarily mean retail sales are going through the roof, but it's retail Nirvana in the sense that all sorts of things are happening at the same time that are really helping the retailer, particularly on the gross margin side.
So when you're putting money to work right now, you're not necessarily looking so much at the monthly numbers. You're looking at the balance sheets of the retailers themselves, and you're liking what you're seeing. Yeah, I mean,
this is retail Nirvana we spoke about, as you saw 8 months ago. Forgive me that it's the same tie.
Well, you were right then, so why not?
But basically, what we said came to pass. People were a little bit shocked. How could we say it was retail Nirvana 8 months ago? And you saw over Christmas it was retail Nirvana. Why? I mean, it's actually stronger than it's ever been now. It's even stronger than it was then, and it's stronger because now you've got the benefits of all the things we spoke about before: better gross margins, better SG&A. Now you've got the stronger sales as well.
So 77% of retailers have higher operating margins than they did a year ago.
Yeah.
And it's something that's making you find a reason to buy today?
Well, I'm not suggesting that you buy today, because stocks are a different issue. Of course, the stocks have huge expectations in them because of the strong March. So, in fact, the stocks actually may already reflect a lot of the good news. I'm just talking about the economy in general, what's happening. In terms of, to answer your question, no, sure, that really helps. But what really helps is the sales to inventory growth rate. Inventories are particularly low.
We are seeing, once again, more than 1% decline in the Dow, in the S&P, and on the NASDAQ, down more than 1.4%. So a lot of pressure there, especially in the consumer discretionary space, on a day when we did see chain store sales come in the month of April as a bit of a disappointment. Yet we're talking so much, David Berman, about potentially a comeback on the part of the U.S. consumer. You just can't keep them away from the cash register. Well, apparently we did in April.
Well, I think to a large degree, the stock market, usually on a Thursday when the numbers come out like today, actually drags the whole market down. And I think you're seeing some of that today. When the portfolio managers and economists are looking at the same-store sale numbers, they're saying, well, this is kind of weak. According to our index, same-store sales for the month, we're down quite a big number. But, when you look at it together, it's not so bad.
So maybe the market's giving a false read, you're saying, in terms of some of the positive things that you're seeing inside retailers right now. Give me a sense of where they are in terms of controlling sales versus inventory, the amount they've got on their shelves versus the amount that's going out the door.
Well, one of the things that the reason why we know that profits are going to be so good is because inventories are so well controlled. If you look at total sales reported in the last quarter, total sales for every company in retail in the U.S. were up 4%. If you look at all 300 retailers, total inventories were down 1%. That 5% spread, which you see on the graph right, is the best relationship it's been since 2001.
So you say it's still a perfect storm for retail, even though
it's a perfect storm for I wouldn't use that. It's retail nirvana. There's no question about it. Having said that, there's been slight weakness because people got overly optimistic in March and they got overly enthusiastic in April. So essentially, we're back to the norm. The norm is better than it was in January and February. The run rate is higher.
All right. Thank you so much for your perspective. Thank you, David Berman.
Thank you very much, Margaret.
Stay with us here on In Business.